This is the Amazon chart. And what I'm showing you is cycle analysis. There's some people that have never seen this before that are looking at the show right now. And we are simply looking at the rhythms of money flow in the market. This on the bottom that you see right over there, those are called cycle brackets. That simply helps us identify the money flow rhythms in the market where there's a common movement of advances and declines in the markets. We can see the trends as you see here on the upside. Amazon's been great, but something is changing. Let's highlight what I see here on the weekly chart. So again, this is a cycle from trough to trough. That's how we measure it. And these are the cycle rhythms in here and show you the average length. Every single cycle, every single symbol has its own cyclical period. This one is 35 bars or 35 weeks that we have in here. And I see that just by highlighting it, it says 35 weeks right there. Now, this is an upside cycle. We call this a positive translation because the peak came way on the right side of the cycle. The same thing happened right over here. This is different. This cycle has broken down already. As it came up, made a new high, as would be expected, and then came down and took out this cycle low right there with all of this time left to go. So the low over here, and I'm just going to bring these over. I'm going to duplicate this here. So I'm going to show you the range of where we expect the low come or the trough in here is somewhere out over here in the beginning of 2025. So because this broke down, it says that the rally will likely fail in resistance, and you see that going on right now. Also, you see in here that as it was moving up, our reversal scout showed you it was bullish. When it rolled over, you had a correction. Here it barely could roll over, and here it rolled over right there and is still negative momentum. Negative momentum, breakdown in here, failing in this area right over here. The probabilities are very high. I'm going to make it 70-80% that this low gets taken out right over here, 151, sometime between the next quarter and the first quarter of next year. Likely going to happen sooner rather than later because I think that the stock market is going to get hit into this September, October, or November period. So, and you can see in here the projections coming down to as low as about $141 over here, which is the major 50% retracement level. So this is weak. So now let's take a look at the daily chart. The picture here is a little bit different for now. So you can see in here the same cycle rhythms, the same beautiful patterns that we've seen. And right over here, we're looking at a cycle that made its low. You had a rally and is coming down again. This looks to me like what we're going to see is we're going to see some back and fill in here, maybe another attempt to get up here to about 182 or so, somewhere in these resistance areas, and then turn down. This period over here in late September starts to align with the period of risk in the stock market. If you get under this level right over here, which is the low at 168.92, that will be a bad sign. That will be a sign that Amazon has already succumbed to the forces on the downside that we see here on the weekly chart. I would expect that it would not do that because this was a pretty good pattern in here, and it says to me it's likely to keep trying over here for a little bit, but then I think it's going to move down. Again, keep in mind that low right over there, 168.92. If that gets taken out, it will be a bad thing, and it will say that Amazon has already turned lower for the next wave to the downside. It's been trying to rally this week, and I wouldn't be surprised if buyers come back in. So my analysis says that if it does rally up in here to near that high right over there, let's say 182 to this resistance right over here, 182.78, another one over here, 187.50. I don't think it's going to get there, but this is my sell zone right up over here. That will change if you break that low right there. And I think the probabilities of the stock moving from the 180s down under 150 in the next several months is very high. That is my intermediate look at Amazon, and very much in line with the weakness that we see in a lot of these retail stocks, especially those dollar stores that I've showed you, the breakdown in Dick's And I don't think Amazon's going to be able to sidestep the problems that we see for consumers.